Do you know what's going to happen in crypto next? Or better yet, do you know what to watch so that you can forecast a pretty accurate entry point? In this video, I'm going to show you one solid metric that I look at every day, every week, and right now it's doing something very interesting. So if you find this video helpful, give me a number 4 in the comments, repost it, bookmark it, share it, like, follow, all the fun algorithmic stuff. Help me get this thing out because I think it's so simple that most people simply are overlooking it. Now, I want to talk about this little chart behind me real quick and this specific index that we track. But first, let's talk about denominators. Specifically, when you own an asset, what denominator or what's the lower half of the trading pair that you're valuing your asset in? Typically, it's the USD, the US dollar, right? BTC/USD or ETH/USD, XRP/USD. And depending on how you look at specific assets like real estate, with Bitcoin as the denominator, real estate's becoming cheaper. However, if you look at real estate with USD as the denominator over the last few years, real estate's gotten a lot more expensive. The point's not about real estate, it's about how we look at a particular asset denominated by another asset or commodity. So back to this graph, I'm looking at the DXY. Now the DXY is the US dollar index. It's a global index of the strength of the dollar versus 5 other major alternative foreign currencies like the yen, the pound, the Swiss franc, etc. Historically, when the DXY goes down, quote unquote, or in a typical downtrend, risk assets like Bitcoin and crypto go up. This is where the Federal Reserve is considering an intervention where the Federal Reserve is going to sell dollars to buy the Japanese yen. One of the 5 indexed currencies that are pitted against the US dollar globally. The Bank of Japan is one of the largest banks in the world in terms of central banks, and obviously Japan is one of the top 5 most important economies. They also have a special place at the table when it comes to the whole Japanese yen carry trade. And whenever the Bank of Japan raises interest rates, which they've not done a whole lot in the last few decades, whenever they raise interest rates, the global markets freak out. So they want to currently support the yen. They want a stronger yen. They need a stronger yen to prevent the whole yen carry trade unwind thing. However, they don't want to raise the rates. So the Federal Reserve, acting as the world reserve currency and basically the central bank